Okay, good afternoon, everybody. Welcome to the third session of the opening day of the Singapore Pavilion. It's great to have to see you all here. And today we're going to be talking about how we're accelerating clean technology access for emerging market consumers. My name is Keith. I'm from the Temasek sustainability team. And just a quick orientation, because this is part of my job, to just give a really quick introduction about what is Temasek for the uninitiated, aka for those of us who are not from Singapore. Temasek, we are a commercial investment company formed in 1974. Actually, next year will be our 50th anniversary. We were incorporated by the Ministry of Finance. We are owned by the Ministry of Finance as our sole shareholder, but we're not directed. We operate on a 100% commercial basis. And we have a net portfolio value, as you can see, of just south of US 300 billion as of 31st March earlier this year. We own and manage our own assets and operate off our own balance sheet. And we have about close to 1,000 staff in 13 offices across 9 countries, including Asia, Europe, and the Americas. Our purpose is so every generation prospers, and it's really a call for us in service of the communities in which we operate and the outcomes that we drive from a commercial but also from a planetary and societal perspective. In terms of our climate targets, I think we are quite, we've been quite prolific about sharing our commitment to really halve our 2010 base level emissions across our entire portfolio by 2030, and with the ambition of a net zero portfolio by 2050. We have also, on our own accord, instituted an internal carbon price currently at $50 to really shape and influence the way we think about the future cost of our investments and to price in the risk, as we know climate is an inevitable oncoming train and we need to be prepared for it, and what we're doing to factor that into our investment decisions with the aim of increasing it to $100 by 2030. And we have many various long-term staff incentives to incentivize our investment and corporate colleagues to pursue our portfolio emission targets, as we've shared. Sustainability is at the core of everything we do. I think, as I mentioned, a lot of what we talk about is not just about the climate, but really how we are looking to build an inclusive, better, and as well as more sustainable world. And as our chairman, Mr. Lim Boon Heng, said, succeeding as an investor is not an end in itself. Ultimately, it must result in a more better and more sustainable world for people, communities as well. And finally, just a final plug. We do convene our own sort of sustainability flagship conference. I think we're quite proud to say that it's probably the biggest sustainability conference, business-oriented one in Southeast Asia. And next year is actually the 10th anniversary of our Ecosperity Week, which we're convening in April 2024, so save the date. If you happen to be in Singapore or you're keen to join us, please do. Yeah, it'll be really exciting. Okay, that's my 5-minute corporate spiel. With that, I just wanted to officially introduce today's session. We're here really to talk about what we're doing to accelerate and the adoption of climate solutions in emerging markets. As we all know, is a key agenda focus for the COP28 presidency. In particular, we want to focus on 3 specific markets: Southeast Asia, South Asia, and Africa, which we know obviously house some of the world's most vulnerable and poorest populations. Today, they account for around 25% of global emissions, but with a combined 5 billion consumer market. And as many of these consumers begin to experience a surge in incomes, the ensuing products and services that they will consume could fundamentally shift the balance and make or break our collective net zero ambitions. So we're very excited today to be joining forces with our colleagues from Leapfrog Investments, as well as the European Investment Bank, on what we believe is a once-in-a-generation opportunity to inject capital into these markets and doing our part to deliver sustainable green emerging economies in a just and inclusive manner. Now, to kickstart our session this afternoon, I'm very pleased to invite Nakul Zafari, who is our who is partner at Leapfrog Investments and the co-lead of the firm's climate investment strategy. Nakul will share some groundbreaking research underscoring the commercial impetus to accelerate green investments into emerging markets and how these markets can leapfrog, pun intended, polluting expensive technology and infrastructure, creating millions of new jobs and prosperity along the way. And Nakul will also unveil for the first time our collective commitment to catalyze commercially viable green solutions across various sectors, including the built environment, energy, mobility, and food sectors. Nakul, if you will, please. Yep.
Thank you, Keith. Very excited to be here. Thank you, Keith, for that introduction. And it's always a privilege to be part of the Singapore Pavilion at COP. I was there last year and very happy to be this year. But also, thank you to our partners, EIB and CGAP, in joining us in this journey to understand and then deeply deliver what we believe is an exciting piece of research to allow a transition to a low-carbon future while creating impact at scale for low-income and emerging consumers in emerging markets. Very quickly, about Leapfrog, we are an investment firm. We invest across Africa and Asia. Our core thesis is to deliver impact at scale with commercial returns. We started our journey with financial inclusion businesses, and then we built healthcare on top of it. And when we realized that if you do not make the low-income consumer more resilient to climate impact and give them tools to transition to a low-carbon future, the first two are less meaningful. And therefore, Leapfrog now invests across financial services, healthcare, and climate solutions. I think with that, I'm very, very excited to present some of the aspects of our research that came out around our climate solutions. What are the key things that keep on, that we keep on asking ourselves, and specifically one of the large questions is, how can we support the rapid economic growth of emerging markets without breaching planetary limits? We have been asking these questions for a long time, and we wanted to kind of understand what is happening at the root of it. What is the fact is that almost 70% of global population growth, which is almost all population growth, is going to come from emerging markets, in the next 30 years. And almost 50% of GDP growth is expected from emerging markets. This is a very stark piece of data that we need to understand. And for us, what is important is that there are about 4.5 to 5 billion people who are in emerging markets. And therefore, this becomes very relevant for their transition into prosperity. If you look at this, almost 1.5 billion people will rise into middle class. And that's happening on back of a number of things going for the emerging markets. But the fact is that with this 1.5 billion consumers rising into middle class, they will also start spending more. And with that, there will be increase in emissions. And if you purely take a 1:1 correlation, that means a 5x increase in emissions. And the fact is that if that happens, we can do everything to decarbonize the West, but emerging markets will actually exhaust the carbon budget very, very early on. Therefore, the other way to think about this is that while there could potentially be an increase of 5x in spending and a substantial increase in income levels, there could be a way for us to decrease emissions simultaneously, and what we call the green leap. And if you do this on the back of green leap, not only do you decrease potentially the emissions that the emerging consumer, or what we call the rising consumers, will do, but we also create a just transition in that effect. There are 4 areas, if you see, which is energy, food, mobility, and built environment, which essentially form part of what the emerging consumer will spend significant amount of their resources into. And this actually totals to almost 9 gigatons of additional annual CO2. Now, just to put this into perspective, currently we emit 54 gigatons. And almost 75% of this comes from developed markets, including China. There's about 25% comes from target markets of leapfrog, which is essentially Asia and Africa. But if there could be a scenario where China and rest of the world are doing significant amount of stuff to decrease their emissions, and that there could be a scenario where that 75% from 54 gigatons comes down to about 10 gigatons. But the reality is that if nothing is done for the emerging markets, the 25% could actually become almost 75%. And that, again, as I said, exhausts the carbon budget for global markets. And what is interesting is that there is a pathway to bring this down to almost 50%. And if we don't do this, you're breaching planetary limits much faster than anticipated. So coming back to 9 gigatons, we need to make sure that we address this 9 gigatons, which does not push us above 2%. And what excites us for this green leap? If you look at this slide, and it's a little busy slide, but again, built into transport, built environment, power, and agriculture, in 2020, almost 0% is electric. About 35% is energy efficiency, about 30% is demand-side management. But if you see to take the green leap, by 2050, 99% of transport will need to be electric. 99% of public buses will need to be electric. 55% of energy for industry will need to be renewable. So there is a massive amount of increase that is required in these industries to transition into climate-friendly, or what we call a green leap play. And at Leapfrog, as we said, one of our key messages is to make sure this just transition happens from an inclusive perspective. The vulnerable population in emerging markets is massive. The large parts of Global South will have this impact felt worst by the target regions that we are investing in. Almost 200 additional people falling back into poverty because of climate change. Almost 8.8 million people die by air pollution alone every year. And it's much more than smoking, actually. About 7 million people die by smoking every year. So how can we quickly scale the adoption of carbon-resilient climate solutions? The reality is that if you flip this question from shifting to a green economy, which is traditionally more expensive, to harnessing, as Steve, you say, power of nature, is exciting, because that power of nature now allows us to drive the economic growth across how we generate our energy, how we build our cities, how we grow our food, and how we move around. And that is exactly what is required for emerging consumers to move into prosperity. The green leap now is aided by a number of things. There are tailwinds across tech evolution. There are tailwinds across business model evolution, specifically for emerging markets. Innovative financial instruments are coming through, like the carbon markets. We're seeing regulations moving faster than they've ever moved before. All this is allowing a transition from a green premium to a green discount. And that is exciting for investors like us because the one thing that is not non-negotiable from an emerging market consumer is affordability. And therefore, if we manage to increase affordability, that will itself drive adoption and scale. And the green discount is prevalent in a number of sectors that we are already looking at from an investment perspective. Remember, this switch is not expected. This switch is already happening. The switch is happening in areas where we are investing in, right from concept to development across energy, transport, mobility, and food. We are seeing tipping points. And we are seeing tipping points moving to mass market, moving to late market adoption. And that becomes exciting because not only does that impact the humanitarian aspect of it, but also allows to create value. And when we started deep diving onto the green discount, we started analyzing what is the depth of green discounts. Is it 1%? Is it 2%? The reality is there are between 30 to 75% across sectors and across our key markets. And that is really, really exciting because now governments can actually frame policies that could not only provide incentives, but could also have a penalty structure for adoption and scale. This is a classic study in two-wheeler electric vehicles in India, for example. Already, the green discount for two-wheeler commercial adoption in India from an electric perspective is 30%. With additional policies, this becomes 40%. With innovative business models like battery swapping, this becomes 50%. And that becomes a no-brainer when it comes to adoption and scalability. Similarly, look at the market sizes, right? I mean, the kind of capital that is required in our markets is tremendous. There are very, very large numbers spoken about between trillions of dollars. But when we break it down between energy, mobility, food, and built environment, there are very clear indications of this transition and of value creation happening. But you would believe that because there is a green discount, because there are policies moving in the right direction, more capital would be flowing into markets. But that is not true. If you look at our markets, and specifically where Leapfrog focuses, there is insignificant amount of capital that has gone in. And that is a number of reasons. Because a lot of funding agencies believe that you can solve the climate problem by decarbonizing the West. But as you rightly saw, if you do not invest in emerging markets, decarbonizing the West does not matter in the long run. And it's very, very critical and important to make sure the dollar goes across these regions. For us at Leapfrog, again, the climate investing strategy is very, very clearly focusing on not only a just transition, but we also want to accelerate and take advantage of the value migration that is taking place of. This value migration is intergenerational in nature. It's happening once in many lifetimes. And again, as our chairman, Dom, talks about, once in a lifetime capital reallocation is happening. Happening from traditional fossil fuel-based era into green energy. Happening from large-scale dirty technologies to green discount new technologies. And it's happening at a scale and pace that hasn't been anticipated or expected. It's happening from the global north to the global south. We will invest in growth markets. We believe that this is where the vacuum is, and this allows us to scale those companies to greater heights. There are enough and more data points across market, across emission reduction potentialities, and also impacting SDGs in our strategy. But what really matters to us is this dual purpose that we are talking about of creating superior risk-adjusted returns, mitigating environment or emission reductions, but also creating social outcomes. And therefore, when you talk about addressing access to electricity, food security, mobility solutions, or even enabling movement into prosperity and livelihoods, focusing around job creation, productivity gains, specifically health benefits, is what is the way Leapfrog strategy is differentiated. And lastly, I'm very, very excited again, not only to be here and partner with Temasek, but also partner with EIB in this endeavor, where we have managed to work with both of them being long-standing partners of Leapfrog, where Temasek has committed $100 million to our investing strategy, and Leapfrog is working with EIB to try and move towards having them as part of our cornerstone strategy as well. We're working with a number of other investors, and we hope to address this at scale as fast as possible, and the markets that excite us. Thank you very much.
Thanks, Nakul, for casting a spotlight on the green investment opportunity in emerging markets. Next, we're very honored to have with us Dominic Barton, Non-Executive Chairman at Leapfrog Investments. Dominic, as we know, is also Chairman of Rio Tinto and was formerly Global Managing Director at McKinsey & Company, where he served from 2009 to 2018. Most recently, he served as Canada's ambassador to China and also Chairman of Tech Resources and as Non-Executive Director at Singtel in Singapore and Investor AB in Sweden. Dominic is also one of several co-founders of the non-profit organization Focusing Capital on the Long Term, or FCLT Global, which has a mission to focus capital on the long term to support a sustainable economy. Dominic, please.
Thank you. Thanks so much. Can you hear me okay in here? It's wonderful to be here, and thank you for, I think we're flipping roles in here. I just wanted to talk for a couple of minutes. First of all, thank you, Nakul. Please pick up a copy of this work that Nakul did a great job in summarizing. I just wanted to make a couple of points because we're going to have a wonderful panel come up and really get into the detail of it. And the first point I would just make is we're clearly we're in our third energy transition as humans. You know, we went from basically wood to coal to fossil fuels, and now we're doing fossil fuels to renewables. But I think the challenge with this particular transition is that we're not just trying to make a shift, we're substituting while growing. And Nakul's made the point, we've got 5 billion emerging consumers, 1.5 billion going to the middle class. They have every right to participate and enjoy prosperity. And when we think about these targets that we've set, which are pretty significant for 2050, we have to think about that group. So we're going through an energy transition, which in itself will be the single largest reallocation of capital in human history. We will never have done this amount of capital reallocation like we're going to be seeing over the next 30 years. But on top of that, we have to think about this just transition. We have to think about the 5 billion, the 1.5 billion that are rapidly moving up the curve. And from my own personal lens, just two things. I'm at Rio Tinto, where we're very much focused on providing the materials for the energy transition, the steel, the copper, the lithium, the aluminum. That's our focus, but that's a broad remit. A lot of the countries we work in are actually in these areas that Nakul mentioned. So if I think about Madagascar, where we have a large mine, we've got 34% of the population that has access to power. They're basically burning wood. We're losing hundreds of millions of acres a year of pristine forests because people have to burn wood to be able to move forward. So being able to get them access to renewable energy is a very important element in this. So we've got these two transitions, and where I'm excited, Leapfrog is playing a role with an incredible support of Temasek and also EIB, who's been a long-standing partner as well, but particularly with Temasek, is how can we help those consumers in this transition and provide the products and services for them to be able to do it in a profitable way. We have to attract a huge amount of capital, so there has to be returns. And we're very excited about the prospects. Nakul mentioned, you saw probably a number of the companies that we've looked at that we're very excited about. For example, Sun King which is providing solar power to consumers in places like the DRC where there is no grid, but it's enabling people to be able to power a hot plate, to power lights for children to be able to learn, and also cell phones and so forth. It's there and then done in an economic way where it's affordable to people that are earning less than $11 a day, but it's also profitable for the companies that have actually been set up. And that's kind of our sweet spot about where we want to operate. And we see tremendous opportunity. And the last thing I would just say is I think from having 15 years of experience in providing financial services and healthcare to 500 million of that group, we're tapping into that experience to then do that with a climate strategy, again, where we can provide power, the mobility, and so forth in that way. So we're very excited to be doing this. I just, again, want to thank Singapore for hosting us in this, Temasek and EIB, and I look forward to the panel. Thank you very much.
Thank you, Dominic, for those really inspiring remarks. Okay, now we are going to go into our panel discussion. And for this next section, the segment will discuss innovative solutions that businesses, investors, and financiers can turn to yield sustainable returns on investment while driving real sustainable development. I'm just going to invite our panelists to now take the seats as I introduce them. Joining Nakul, who you've seen on the presentation earlier, will be Melania Missouri, who heads corporate finance and global activities at the European Investment Bank, EIB, as well as Sophie Sertain, the CEO of Consultative Group to Assist the Poor, or CGAP, an international partnership house in the World Bank Group, dedicated to promoting inclusive financial ecosystems that enable a green, resilient, and equitable world for all. Last but certainly not least, my esteemed colleague and boss, of course, Steve Howard, Vice Chairman Sustainability at Temasek. Steve is a board member of Gen Zero, which he helped establish, also a founding board member of the Temasek BlackRock Joint Venture Decarbonization Partners. In addition, Steve is also founding chair of the Women Business Coalition and a member of Leapfrog's Global Leadership Council. Steve, this floor is all yours.
Thanks, Keith. And I have to say, I would have come to Dubai just for this event, because I think what we're doing together is right at the heart of what we should be focused on at this COP and at this junction in time. So we were having a discussion in the little green room before, and I mentioned how at a previous Leapfrog event I had a bit of a passionate rant, which I won't fully repeat, but I just said that, it felt like capital markets, investors and businesses looked at the Sustainable Development Goals, some governments too, looked at the Sustainable Development Goals and thought, that's a nice side project. And I was like, no, that is the project. We have to be in service of, that's the main plan. So how do we align the roles of investors, of government partners, of technologists, of entrepreneurs, of civil society to accelerate and deliver outcomes that benefit people and the planet? And the other thing we were talking about was how actually the just transition is a phrase much used and very rarely acted out, actually. And inclusivity usually come in at the end. We talk about this as a co-benefit, as opposed to a principal and central objective of what we're doing. And so Leapfrog's obviously an impact investor. It's seeking and addressing needs of the underserved. But Sophie, you're, I would say, a world expert on this topic. So how do you think, in what we're talking about today, how does inclusivity, mitigating poverty, and the sort of green growth come together?
Thank you. And I fully agree that these are extremely... It's supposed to be working? Yes. Hello. So good morning, good afternoon, everyone. Yeah, in this report, what we're basically showing is that there is a range of inclusive green investment that not only mitigate against climate emission, but really offer a lot of co-benefit, development co-benefits. Now, why is that important, you're asking? I think it's really important for two main reasons. One is the just transition argument you're making, which is what, Nakul, you were also talking about. People who live in in Asia, in Africa, have all the rights in the world to take part in the green transition and to benefit for what green technologies offer. The second argument is also that, in a way, the world will not be sustainable unless it is, responding and addressing the climate crisis, and it is also inclusive. And we solve, in a way, the most important challenges and pressing issues that the world face include the climate crisis for sure, but also includes inequality, which is a source of conflicts, a sort of many issues today. And so looking at these initiatives that we're describing in the report as addressing both the S and the E in ESG, at building a more sustainable world from a social and from a climate perspective is absolutely fundamental.
I'm just going to move around the panel and I'm going to come back to you for a follow-on question, actually. Milena, I was really impressed. I'd not actually visited EIB before until earlier this year and got to learn much more about. It sounds like it's sort of something you're saying nicely on a panel. I was genuinely very impressed by what EIB is doing on climate and the level of ambition around it. Would you just sort of touch briefly on that? Because probably many people aren't aware.
Thank you. First of all, good afternoon, everyone, and thank you very much for having me on this panel. Let me say that the EIB, the European Investment Bank, which is a multilateral organization, is owned by the EU member states. But recently, I would say 2021, we started reorganizing ourselves and becoming the EU Climate Bank, exactly because we realized that we needed to do more in this space. So we needed to invest in climate, we need to invest in climate adaptation, climate mitigation, and we needed to have a high ambition. And the high ambition has translated in, first of all, making sure that all our projects would be fully Paris aligned, and that has already been achieved immediately when we issued our climate bank roadmap, but also making sure that half, at least, that was our target, half of our investment on an annual basis would be dedicated to climate action and environmental sustainability. This has already been achieved. Already last year we reached 58%. And finally, another target that we had was that by 2030 we would invest or help invest 1 trillion on the ground of investment in climate action. This for not just the EU, because we are very active also outside the EU, and this is the reason why I'm here, because we have been supporting Leapfrog over the years. We have been an investors in Leapfrog, because our activities expand also outside the European Union. And there we also have very high ambition that are linked to making sure that we do decarbonize and we help investing in decarbonizing our counterparts, the countries where we operate. But we do it with having in mind the just transition, so making sure that we are not leaving anyone behind, but also focusing on just resilience. And what I mean by just resilience is ensuring that we are there to support those that will suffer the most from climate change. So the ambition is very high. We invest on an annual basis outside the EU, I would say 10 billion of euros. Part of those are through investment funds like Leapfrog, because we believe that there is value in having partners with us that can be a good aggregator, not just of public sector funding, but also attract private sector. And why? Because if we want to achieve results, public sector money would not be sufficient. So we need to attract private investors so that we can multiply our investment by a factor. And we know very well that this factor has to be high. We need to multiply by at least 6 times what we are currently doing if we want to achieve good results, or at least average results by 2030.
You said good results and then average results, but I won't dwell on that. But I think it's extraordinary what EIB's done in this space. Now in 2023, especially as you look to emerging markets in this volatile, uncertain world with high interest rates, has it just got harder?
Well, certainly we can see that the fiscal space of our public sector counterparts has decreased. There is not enough resources out there when it comes to public sector budget sufficient to make the results and avoid us going through the tipping point of non-return. So we need to do more, and the current situation in terms of interest rate is obviously not helpful in that respect. We see the difficulties of our counterparts in the fundraising process. And that's why our role as an MDB, as an investor, is to bet on those that have a very strong strategy, like obviously Leapfrog has demonstrated over the years, and that's why we are happy to continue partnering with Leapfrog. Our role is to, in some cases, when there is not a strong commercial partner like Leapfrog, our role is also to de-risk the investment. Here we are not doing that, but in some instances, especially for first-time fund managers, for investment in new spaces that are still perceived as too risky, because this is the issue. It's not so much the risk by itself, but it's the perception of the risk. And the perception of the risk in most cases is higher than what it really is. So our role as an MDB is to de-risk this investment, to attract investor by taking junior position in capital structures or in financing vehicles or individual projects.
I'll come to you in a second, Nicole, but just sort of building off that point, obviously there's been a change of leadership in the World Bank. You've got Ajay there now with very much a sort of clear focus on climate. And there's been a big focus on the role of the MDBs and how they can refresh their role to leverage much more private capital. I wonder if you had a perspective on that.
Yes, and first I'd like to mention that Ajay Banga will have a fire chat in the World Bank Pavilion tomorrow, so you may want to hear from him directly. But one of the first things he did as new president of the World Bank Group is to change the mission of the World Bank Group to a world free of poverty on a livable planet, the second part being new, which basically says a lot about his vision, which is really that development challenges are interconnected, as I was saying before, that you can't eliminate poverty if you don't address the climate crisis, because climate shocks address primarily low-income populations in developing countries and increase their poverty, make them less resilient, lose income, force migration, and so on and so forth. Of course, he does agree also, as you were saying, that, and as you, Milena, were saying, that MDBs, both from the public sector side and policy advice that they give to government, and from the financing side that they can offer through their DFIs to de-risk private investment, have a very key role to play. And that the intersection between the two is really fundamental. So he's putting a lot of emphasis on partnership as part of his vision. And that's where, again, what we're talking about today is just aligned with that vision. Partnerships are necessary to get to the billions of dollars that are needed for the green transition to be successful, while generated a more inclusive world.
Right. I'm going to come to you, Nicola, but a little bit about the sort of to unpack a little bit of the information from the report, and also the work that you've been leading and focusing on, looking into the investable opportunities. And if you think about it, we're actually can feel that we're sort of at this terrible point in human history where we've got really accelerating climate change, the collapse of nature, pressing poverty, and very challenging geopolitics. And while that may be true, we're also at the point in time where we also have now these breakthrough green discounts. So we have technology and business models that offer a path for growth that's in tune, that's the best way forwards for people to lift people out of poverty and meet people's expectations, and at the same time be able to tackle climate change. And I think the numbers are very potent, and they're really important numbers that you put up on the stage. The fact that really this is where the population growth is, this is where a lot of the economic growth is, and we need to accelerate that and the economic growth there. But how do we do that in a way which is also in tune with the planet? What have you been seeing that excites you as opportunities as you've been looking across Southeast Asia, South Asia, and Africa?
Yeah. Thank you, Steve. Again, very exciting to be on this panel. Let me tell you a headline that I recently read by Bloomberg. It said 1 billion air conditions will cool your home, but will cook the planet. And it was referring to South Asians' ability, because of availability of credit, cheaper air conditioners, and really warming increasing, the ability to buy air conditioners is much easier now. And therefore, number of low-income people have now access to air conditioners, and rightly so, they will buy it without realizing what can happen. However, to your point, you have technologies which are now available, which can give you more efficient air conditioners, and they're increasingly becoming more affordable. And therefore, suddenly you have business models which provide you better, faster, cheaper, but much more emission reduction-friendly technologies for your air conditioners. This wasn't possible 10 years ago. So therefore, the problem is getting addressed with technologies without compromising value. And that is what we are seeing, value migration taking place. We are seeing on the back of e-commerce, on the back of consumption increasing, more and more people are buying online. More and more people are consuming and delivering food online. And therefore, we are seeing 30% increase in last mile mobility solutions. But that is all happening by electric two-wheelers. And that is fascinating because there's a pull factor of the Amazons of the world, the Deliveroo's of the world, the Zomatos of the world are saying that they are going to be zero carbon last mile delivery by 2030, not by 2050, by 2030. Not because they only want to save the world, but because there's a green discount and it's profitable and it's economically positive impact. And therefore, the opportunities that come through in South Asia around mobility are exciting. The opportunities around decentralized energy in the continent of Africa is exciting. The opportunities around food revolution, whether it's alternative proteins, whether it's sustainable packaging, again, mobility in Southeast Asia, including Indonesia, Vietnam, Philippines, are exciting. So we are seeing growth opportunities across Africa and Asia in these four sectors.
This is a more general question for across the three of you, really. I mean, there's sort of the business case is clear. There are entrepreneurs coming forward with exciting investable businesses. This is pressingly important that we have a lot of capital deployed in this direction. And yet we can see, because of recent financial events, capital markets sort of pulling back from emerging markets, asset owners. What can we do to unlock that, do you think? Milena or Sophie, maybe first.
Yeah, I can start from the vision of an investor, because ultimately we're an investor. So for us, what really makes the difference is to bet on those aggregators, those platforms, fund managers with strategies like Leapfrog, for example, that have a proven track record. They know how to deliver results. They know how to deliver results not just in terms of commercial results, but also in terms of impact, in terms of outputs. We were just talking about that with Sophie before. Why? Because this is what private sectors, investors are currently looking at. They want to see the financial results and they want to see the exits, but they also want to see that their money goes to satisfy their policies in terms of ENS. And for that, I would say we need to put in place, systems that are collecting and monitoring what we are doing on the ground, so that we can show the results and attract more investors going forward. So I think that is the secret, is having not just a financial and a commercial perspective, but also remembering that there is another reason why we are investing in this space and showing the results so that we can attract further investors going forward.
2023, are you optimistic or pessimistic or somewhere in between, Sophie?
I'm on the optimistic side, but I've always been, for several reasons. The first one is building on what Milena, you were saying. While liquidity is much more limited in the market and the situation everywhere is tighter, I see a paradigm shift in what matters for the private sector, what the private sector is trying to achieve. And I see the new generations of staff and of investors in the private sector really asking for a double bottom line, an impact story, and an impact narrative. And that is changing fundamentally in a way where resource allocation is likely to go. So that's one of the key things that make me optimistic. The second is simply digital and technological development, and the potential that it offers for inclusion, not just in terms of the green discount that we've already talked about, which is very fundamentally also going to drive access to green technologies everywhere. But the digital transformation that is happening is also enabling many more people on the planet to take advantage of digital economies, digital economic opportunities, and much more, and financing. Financing can be now offered on the basis of the digital trails that the poor generate through their digital transaction in a way that has never happened before. We've done research at CGAP, for instance, that show that 73% of the world's poorest, those who live on less than $5 a day, are digitally active. And you can now use these digital trails to do credit scoring or KYC for those who work in finance, to bring them into the financial system and offer them credit, which then they can use to acquire, for instance, these green technologies. Now, they may still need for subsidy for the lower end of the population, but inclusive financial systems are going down market rapidly. The carbon credit market also can be tapped to reward people who use green technology and reinvest the benefits to provide them with better conditions. So overall, yes, I'm on the optimistic side, while recognizing there are risks, but we can leave that for another session.
Yep. A little optimism goes a long way. The whole climate issue has been described, it was Jeremy Grantham actually said it, called it the race of our lives, which I've adopted that phrase. And you could say, overall, if we think of the focus of this COP, it's going to be on tripling renewable energy. That's probably doable, actually, if you look at the level of capacity that we have in solar production, in wind production. The risk, though, is we double down in the developed world, or triple down in the developed world. and we do not have the focus on emerging markets that's required. And it's just because it's the risks are lower, there's less friction. It's just what capital markets are geared to do. So in the race of our lives, I would say the race is really sharpened, it's really sort of focused. This is an emerging markets race where we've got to really, really accelerate. Do you see signs of acceleration? What would you like? If you had a wish list, Nakul, what would it be?
So let me take a step back here. And I was thinking about this, should this be top-down or bottom-up? Yeah. And one analogy that came through, and I went in and did some research, is the impact of climate risks are as conclusive as what smoking is to lung cancer, right? But we're not doing as much as we want to right now by any means. So it's still happening top down. So one of the things that we are thinking about what it takes to do kind of bottom up as well, because you'll have to meet halfway. So that is number one. But number two is my wish list is what we are already seeing large corporates doing it for the consumers. For example, when I talk about the Gen Z example, the Unilevers of the world are now excited to sell to consumers who are going to become consumers in the next 10 years. And they're building sustainable products. They're building sustainable supply chains. So with green discount on one side, with governments and innovative financing structures with carbon credits coming through, blended finance instruments coming through, with multilateral agencies recognizing the fact that financing climate is a non-negotiable and a binary approach, things have already accelerated. I would have loved everyone to understand the impacts of reaching 1.5, understanding better, because I don't think a lot of us understand as humans what will happen if 1.5 is breached. The amount of domino effect that will start in emerging markets. And the last data point is if emission grow at the same rate that they did between 2000 to 2019 in emerging markets will exhaust the global carbon budget by 2038, which means no one else can do anything else, right? We have overtaken this, and that will not be good for the world.
Sophie.
Can I complement that? Because I'm on the optimistic side, but I still believe that to get really the flow of funds that is needed in emerging markets for them to take advantage of what the future offers in terms of green solutions, we still need much more to happen. There are, in my view, two problems we need to tackle. One is that a lot of the attention, including in the climate space, is going at large projects, large renewable, large transportation projects. They're necessary, right? Don't make me say what I don't want to say. They're fundamental. But what we're talking about in this report are small, inclusive green projects. These are as important. Collectively, they can generate as much in terms of carbon reduction, but they can have much more inclusive benefits. So that's one change that needs to continue happening. The second is that even before the financial conditions became tighter in markets, we were observing that impact investment was still much shorter in developing countries, and in particular in Africa, than in the rest of the world. And so we're very happy with what you're doing, because that's exactly going in the right direction. But we're not there yet. So I want to really emphasize that we need much more capital going to emerging markets and to inclusive green solutions.
Very good. I'm just doing a time check with Keith, and we've got 5 minutes. Should we do a quick Q&A? And do we have any questions from the audience? And if you do, would you mind just briefly introducing yourself? There's a lady at the back and 2 gentlemen here, so we'll go to the lady at the back first. There's a mic coming.
Hello, I'm Samina Nazir from Pakistan. Thank you so much for this very informative session. I work in a nonprofit, and I work primarily with rural women and youth. And speaking from Pakistan's perspective, in addition to the climate, we have several other challenges that increase the burden on climate, such as the population. Pakistan is the 5th largest population in the world. And I just want to build on the comment of the last speaker of going to smaller, inclusive entities also. So I, for example, work with rural women, and we don't see any mechanism where small nonprofit like ours are connected with these big ideas or initiatives. Had I not come to COP28, I would have never known about Leapfrog or any of these efforts. And it is us on the grassroots in the villages who are bearing the brunt of climate change and dealing with unpredicted weather and all kinds of things. But we don't have access to information, particularly rural women, and we don't have even the seed money to invest in a small weather station or something that can give us early warning signals. So my question to all of you is, what efforts are being made to connect with us who are on the ground bearing the brunt of climate change, so we could use all this knowledge and technology to mitigate and adapt? Thank you.
Thank you. I'm going to take the other two questions, and then we'll take all three questions at once. Gentlemen, if you won't mind, we're a bit short on time, so if you just keep your question short and tight.
My name is Faisal Parish from the Global Environment Center in Malaysia, working with the ASEAN Secretariat in developing the ASEAN Investment Framework for Sustainable Haze-Free Land Management. We're particularly looking at the issue of large-scale use of fire and burning of agricultural residuals in northern ASEAN, as well as for land clearing, biomass clearing. That's leading to very large-scale emissions and also large smoke clouds covering tens of millions of square kilometers and leaving millions of people in hospital. We are looking at how to generate investment, and so maybe from Temasek perspective or from the Leapfrog investments, I know that in your study you've highlighted agriculture and forest sector as a significant emission source, but are you looking at direct investment that can lead to change this expanding problem of growing large-scale agriculture, increasing land clearing, and one could say poor management practices? How can the investment help? Thank you.
Thank you. And the final question.
Hi. I guess for me, the critical point that came across was assigning very limited resources where it can have the most like domino effect in order to attract more financing to the cause, right? And in that perspective, I wonder, is the funds being spent overall to raise everyone up over 10, 20 years versus directing it into one specific point to really showcase what a transformative change could look like? Like, how do you balance it? Like, is that championing of all these ideals happening?
I'm going to suggest if we take those in reverse order, if that's okay. And from the climate strategy point of view in Leapfrog, if either of you want to come in on this, but you might just describe what does that look like? As you start to roll out a strategy, obviously Leapfrog's already invested in Sun King. How are you doing that? Just paint a picture for those people that don't understand it.
Yeah. For us, as I mentioned earlier, we invest in companies that not only, in the climate investing strategy, that not only build a platform for potential emission reduction, but at the same time try and address positive social outcomes at scale, right? Whether it is job security, whether it's skilling, whether it is making them climate resilient in terms of adaptation perspective. So there's a number of things that are happening. And what we are seeing in areas like Sub-Saharan Africa, for example, in Sun King, is that innovative business models, whether it is pay-as-you-go solar models or access to different products and services, can be financed at scale for a specific low-income group of people, which becomes catalytic. And therefore, the domino effects really start across the demand side, but also the supply side. And this also answers a little bit to the earlier first question around these large companies will start working with smaller companies, and they will start working with smaller companies. And I think that catalytic effect moves across from that climate sector perspective.
Sophie, do you want to take the question from the lady at the back? Would you like to comment on that?
Yes, happy to do that. So first, I fully agree with you that people in the field, women in rural areas, for instance, in particular, are the most exposed to climate shocks and probably the least served with solutions, and in particular with financial solutions. And we've done at CGAB research that just shows that is very much the case. So we're now embarking on a very active advocacy effort to really try to not only say financial inclusion and inclusive financial solution need to be part of the climate response, so that everybody, in a way, includes these much more grassroots initiatives in their programming, but also so that we innovate, we pilot new solutions, because they don't exist. It's not just that you don't know, it's just that there's very little financial products that are actually available to these women, for instance, to adapt to climate change. And so we're piloting new solutions across the world. One initiative we could talk about after is that we've created an accelerator with IDH Netherlands to test solutions that precisely build the climate resilience of rural women. We're active in Bangladesh and in a number of African countries, not yet in Pakistan, but very happy to talk about that in particular with you.
Thank you. I'm going to, unless please feel free to step in, Milena or anybody else, if you have a comment.
Well, just to say that from the EIB perspective, I think it's a mix of the two approaches that you were mentioning. On one side, investing in large, transformative infrastructure projects, but also not forgetting that the final beneficiaries are ultimately the rural women who might not always have access to those. So that's why we are trying always to have a tool of different instruments that also includes supporting microfinance institution, making sure that the lending, the loans are also provided to the rural women and in different parts of the world. Yeah.
I'll attempt to answer your question. I mean, obviously, within the Leapfrog climate strategy, there is a focus on food and ag, which will have definitely some connectivity with what you're doing. We set up a platform, as Keith mentioned, called Gen Zero in Temasek, which is us going long on carbon, for want of a better way of putting it. So we'll focus on the carbon ecosystem, nature-based solutions, and sort of deep where there's carbon price risk, carbon technology there. And that's a 5 billion Singapore dollar platform. And we have made investments across, in particular on the nature-based solutions side, to look at how can you create, I mean, basically you want to you want it to be economically beneficial to keep the trees standing rather than burn them down, don't you? In some very simple terms. And the same thing when you look at agricultural land and burning on agricultural land. So we're really into that. That's only a year and 3 months or so, a year and 4 months since we launched it. But we've made a number of investments. And we're very actively partnering with others. It's a deep theme of things like Ecosperity, the event we do that Keith talked about. But there's obviously a need for a lot more action there. There's promising solutions coming through, I would say, but it needs a lot more focus on it, on that. I'm going to, if anybody has a final word, feel free. Otherwise, I'm going to sum up because we've kept people 10 minutes over. I think for me, the research was incredibly insightful. It's super exciting to highlight that the green discount is here. It's really meaningful. It's between 14 and 73%. It's a big deal. So we have the best way of lifting people out of poverty, providing clean mobility, cleaner food and ag, cleaner cooling, and clean energy is going to be there with the best new technologies. And in the same way that we saw people leap from having no phone connectivity to having cell phones, so they leapt over the landline. We can see this leap as people come into the modern economy where they have access to these services. And I think it's to partner with Leapfrog and with EIB, and as we go forwards and with many others in this, I think is incredibly exciting and motivating. To people who have channels into other investors, find a way of deploying capital into this space. I think there's nothing more important you can do than deploy capital into this space. It doesn't have to be through us. Find a way of doing it. We, in the phrase "a race of our lives," I'd say I'm a possibilist rather than an optimist. So I recognize we have a possibility where on our watch we can end global warming, we can lift people out of poverty, we can have a more inclusive world, and we can reverse the decline of nature. The window is barely open. But with our best efforts, we can open it wide and we go through it. So with our best of intentions, we need to invest in the future we want together. So, but thank you all for the partnership, and thank you for joining us today and online.
Thank you. Sorry, just...
Thank you to our panelists for a fascinating discussion, and thank you for the questions. It is entirely possible that you can continue to connect with our panelists. We'll have some beverages. Please stay. Oh, and also there is the copy of the report, which, as mentioned, that's just at the front door. So please pick up a copy, read through it. Hopefully it'll inspire you to connect with us and the team, and catalyze even more discussions and, who knows, investment opportunities further down. So with that, thank you for attending this afternoon session, and I wish you all a very good afternoon ahead. Thank you. Picture.